All right, all right. Good morning, everybody. Happy GDP Day. So obviously, the GDP numbers. Not only did the GDP growth numbers come in weaker than expected, stuff came in a little, a little hot. All the things that basically, at the moment, the market doesn't necessarily want to see. But we'll look at that in the context of kind of, from whence we came and all that kind of stuff too. And as always on stuff like this, there's always the initial reaction, but then it is going to be all about what happens, after. And is it going to be something where, do the markets end up down 5% today? Or does the market shake this off with the promise of rate cuts? So today's action will be very, very, very telling. It's not the news, it's the market's reaction to the news. So initially here, there's a lot of certainly um, panic. Not, I mean, panic's a strong word. It's down 1%, right? But certainly it's a strong reaction. Yeah, we got, core PC. Yeah, that's 9 AM, Central, right, or Eastern? Yeah, that would be because right, it's not happened yet. So that's what we got. So there's gonna be a little bit of hurry up and wait here. This on a market like this, so let me come back over here to the VIX. And sure, the kind of the chart that's gonna tell you every piece of information you need to know is gonna be the VIX today. Now, right now, the VIX is up, not surprisingly. It's not going crazy at the moment. This is a weekly chart, by the way. Let's change this to a daily chart. So the VIX has come down really, really well. And by the way, this is the first one, two, three, four, five, six, seven. I saw a stat on this that this where you've had oh gosh, hold on. Let me find this exact stat because it's worth perusing. It was specifically about the VIX and kind of the movement that it's had here. Okay, so all right, so the VIX posted a lower high and a lower low for the sixth consecutive session yesterday. That's only the 17th time that that's occurred since the inception of the volatility index. It has been a longer-term bullish indication with the S&P up 13 of 16 times 2 months later, with an average gain of 5.5% and an average loss of 1.8%. So I'm going to post that again because that was a lot of words. Okay, there you go. So I posted it there. And so the idea here is that the VIX posted a lower high. Okay, so lower high, lower high, lower high, lower high, lower high, lower high, and a lower low, lower low, lower low, lower low, lower low, lower low, low, for the sixth. And it might be based on the VIX futures, which show a little bit differently than it shows overnight. Anyway, the main thing here is that of the 17 times that's occurred in the history of the volatility index, it's been a longer term bullish indication with the S&P of 13 of 16 times 2 months later, and an average gain of 5.5% versus an average loss of 0.8%. So anyway, take it for what it's worth. It's just a historical data fact there. All right, so let's look at a couple of things in terms of how the rest of markets are responding. You got bonds, of course, freaking out a smidge. Tesla, a lot of stocks overnight getting hammered here. And let's go through and just kind of look and see. Now, some of these, like Teslas and Netflix in the world, I look at that as okay. Is this something where it's like, wow, this thing is just dead, or is it an opportunity for us to kind of step up? You know, panic gap downs are sometimes some of the best buys, but we've also seen where a gap down can certainly lead to more prices to the downside, right? So we don't want to blindly do it. So if we're going to look at, let's look at the Nasdaq here, just from the futures perspective, just so we kind of get a sense of where we are on the daily charts, and you can see we are merely coming back down to the mean. Okay, so in the scope of things, considering we did get as low as 16,460, and we've had a hell of a rally from these levels, the idea that we could pull back to the 21 EMA is certainly reasonable. I think there would be a bit of concern here, simply because if we look at the ready, fire, aim, we've got sell signals basically. So we're just extremely, extremely, extremely overbought. In fact, I don't know if I've seen it this overbought in a while. Yeah, so last time we got this overbought and we got the corresponding sell signal, of course, it got pretty ugly. Um, Now every overbought sell signal doesn't result in a move like that. You can see that this overbought sell signal resulted in having a move to the 21, a little bit of back and forth and stuff like that too. But from a technical perspective, that's certainly a concern. We also know that this has been a pretty crazy market in the last couple of yeah, 2 months. Gosh, time flies when you're having fun. All right, so we got that, and then if we look at the S&P futures, so we're coming down to the 21 EMA daily on the Nasdaq, or should we say the Nasdaq, and for the S&Ps, it's the same. It's the same story. So not a surprise. We're kind of mirroring each other. So I'd say if we look at this from the context of the bigger picture, nothing has changed. We do have kind of this massive, awkward reversal pattern taking shape. And we've got a neckline here, and the question is, are we going to see some back and forth here and ultimately break up? Um, or we come back and like take out the lows. Anything can happen, right? That's the motto of the market is anything can happen. We don't want to assume that we know exactly what's going to happen. We want to kind of look at the markets and see how it reacts. As Lorna pointed out, we do have some more economic data coming in 50 minutes, and the markets will probably kind of gap down and wait a little bit for that. But I think on some of these, there'll be some opportunities for kind of buying the dip a little bit. MSTR, it's been this has been a pretty strong move here, just kind of a walk up kind of a move. It's going to trade down. Looks like about 9 or 10 points at the open. Earnings, MSTR earnings are kind of a non-event. You know, there's no earnings, right? It's just based on this. We're buying stuff. Now the last couple earnings have been kind of muted, but the idea here is that could we buy a pullback that's interesting? Tesla had a nice surge into the close yesterday. Going to open up down 12 points, and we've got a big old Fireline and 21 EMA at 263. So 279 might be interesting to look at, but ultimately um, we we want to get a little bit. Now, one that to me makes a lot of sense would be Netflix. So Netflix is on its own planet. It's on planet Netflix here, and it's going to gap down about give or take 15 some odd points, and it's a little long in the tooth. This is where we want to kind of come down and look at some slightly smaller time frames and see how this thing is shaping up here. And if we look at like a 30-minute chart, we had a beautiful squeeze here, yada yada yada, getting up there. And, and remember, on something like this, you just treat this like a daily chart. Yes, we know that the daily chart is parabolic, but the 30-minute chart is just a different. It's a world unto itself. And so do the same thing. Oh, here's some consolidation. Here's a squeeze. Awesome. Here's some consolidation. Here's a squeeze. Awesome. All right. Well, we don't have a squeeze setting up on the 30-minute. You can see the pullbacks kind of landed at the 21 and the 34. And one more thing here on a little bit of a 5 minute setting up. Not, that's a great, hey, good looking squeeze there. And if we open up down here at about 11:15 or so, I think initially that's a gap that can be bought. So I will probably look at that as kind of a smaller speculative. Let's just buy, let the market resilient and doesn't necessarily care what the rest of the market is doing. John, today might be different. It could just collapse. Okay, which is a good question that you might have in your mind. Remember all this kind of stuff. We don't focus on the fear of uncertainty. We focus on the chart pattern that we're looking at, the price action that we've seen, and uh, the risk of uncertainty. So the risk of uncertainty can be countermanded simply by the idea of focusing on how much you're willing to lose on that. And what's nice about this, like with options, you can just kind of buy it and say like, okay, if this goes to zero, that's within my plan. So this is not something where you're betting the farm. All right, that's those. Bond market here is, yeah, I should actually update that to the most recent contract. That's the, oh, that is the most recent contract. Okay. Is that right? I thought bonds were moving a lot more earlier. They recover. Okay, so bonds recovered. That's interesting. So it's more notable, of course, if we drill down a little bit. Bonds initially got whacked hard. You got this trade station. I have faith in you. Okay, so bonds got whacked. They're actually coming back pretty decently. So that's interesting. You know, a little bit of a tell. Not too scared that the weak growth, all that kind of stuff. You know, if there's inflationary concerns and then you got a weak GDP, that that isn't an inflationary. It's so ultimately the market may be kind of looking at that and absorbing all that. If anything, it kind of bodes well for more rate cuts. Can you imagine? It's like my wife and I were looking at our, you know, we just kind of once a month kind of look at our, you know, you look at your household. We've got weird things that we have to pay for, things like zebra feed, all the stuff. You know, you kind of want to do a check in and see how much you're spending, and it's complicated because it's, you know, you have a lot of different moving parts and things like that. But it takes a while to get your arms wrapped around it. Can you imagine stepping in like to the U.S. government and saying like, all right, we need to get this organized, and you know, and the idea that if you could streamline and be fine, and you know, ultimately, yeah, no, and ultimately, the idea is that the road that we're heading down towards is going to be massive liquidity and massive rate cuts. Like, there's no other option. And then what does that, you know, do to asset prices and things like that? This is not anything near term. This is more, you know, as things kind of. I actually think the rest of 2025 won't be horrible, but I think, you know, the opportunity in 2026 and 2027 for things to get pretty ugly is pretty real. It's fine, you know, as a trader, great. You know, I'll trade it. No big deal. Um, all right, I'm just kind of going through. Yeah, Starbucks did a little earnings play on that one. That's getting whacked. Let's see. Well, this stock's getting destroyed. What is it, APP? So it's going to open up down like 40, and I don't know why. 7. That's pretty fascinating. AVGO. Yeah, there's just a lot of stuff getting whacked this morning. I think the ones that look interesting here, Microsoft is getting whacked the least. It's down about $5, and earnings are, yeah, today. Okay, that one actually could be interesting. That one could be interesting to buy just for a run into the close today. Apple is holding up okay, and then let's do the dollar index here. The dollar index is, you know, this is great. This is exactly where we want the dollar to be. We don't necessarily want it falling off of a cliff right here. We absolutely don't want it rallying. And the fact here that, oh, you know what? Hold on. Let me check one thing here. So so the fact here that the dollar is actually pretty stable, that's pretty good. And one of the things I always like to look at to kind of see the seriousness of whether or not, how serious the market is taking this is look at Goldman Sachs. And Goldman Sachs, it's moving pretty good with the market as well. So, the market's taking this serious. If it was something where, tech was down and Goldman Sachs was flat, then, we'd wanna start buying things right at the open. But we're actually getting some pretty decent movement there. So we got that across the board, and yeah, SMCI I think blew up after earnings. Man, that used to be a fun stock to trade. Or they're blowing up in earnings, so they're down. They're down a lot. I don't know if they pre-announced or anything like that. This is the ugliest pattern I think I may have ever seen in my life. Like there's nowhere to go but down pattern. That's like, if you were scrolling through like dating profiles and you had a list of red flags. Like, oh yeah, I don't want to interact with this person because that's gonna change my life for the worse. That's exactly what that stock says. Oh, they lowered their guidance. Yeah, that would do it. Yeah, and so if we go back to some of the stocks that were in here, we're in Tesla, so that's gonna be volatile. CME is not gonna care about all this, so that's great. That's kinda why we're kinda in that. MNST Monster doesn't really care about what's happening in the market, right? So the nice thing in this is that if we wanna kind of focus some of our longs, we've been looking at longs that really don't care about what the markets are doing. Um, they're just kind of their own thing, and that's great. So, Monster Beverage is getting more and more people addicted to energy drinks. CME, of course, benefits from volatility and all that kind of good stuff. Oh, it was pretty bad. Wow, the next 2 quarters. Okay, so yeah, so I think so. The market's going to open up in about 9 minutes, and I think, especially like Netflix and a few things like that. There's a couple of stocks that I just want to watch and just kind of see how they set up. Yeah, at Visa, it's a bit of a flesh wound there. Tis but a flesh wound. So the fact that bonds actually recovered pretty well, I mean, that bodes pretty well. Once the markets open, we're gonna wanna watch these internals, especially the VIX. We'll keep an eye on bonds. You can see they actually recovered, you know, pretty good. They're only down 6 ticks on the day. So we'll take a look at all of that, and I think that's about the main stuff there. So we've got about 8 minutes before we set up here. Just look at a few other things. What's standing out? And we'll look at some S&P trades probably this morning. You can see this morning things are trying to turn up here, but it's a little early. It's a little early to dive right into that. So let me bring up the just looking at the bid ask here. Google's holding up all right. ServiceNow is down. We have that. We got a monthly call debit spread on that. Of course, NVDS, which is the 5x short NVIDIA daily. Eli Lilly about flat. Currencies are quiet. Taiwan, Taiwan Semiconductors on the fine. Yeah, so generally, I mean, we're gonna watch. So the fact that bonds have recovered here, most of their losses, not most of their, they've recovered the break-even price. That's a positive. The VIX isn't going insane, at least not yet. And and look, remember in this market, I think at this point, Trump is very conscious of not wanting the stock market to die. So at any given time, he can say something that we fill a gap. So at the very least, if we gap down here this morning, I am not looking to short. This market, we want to look at areas of resistance to focus on shorting, and really just kind of looking at, we've got a handful of stocks that are kind of marching to the beat of their own drummer, and we've seen some extreme reactions this morning that might provide some opportunities. But basically, you got a bad number with jobs, you got a bad number with GDP, um, inflation's looking hot, and then we got another number coming out in 35 minutes. So we'll keep an eye on this stuff. We got to keep an eye on the Mag 7 today. If they don't recover, the market's not going to recover. All right, so all kinds of fun stuff there. Oh, 10 a.m. Okay. Wow. All right. It'll be a crazy morning. All right, the market's going to open up in 5 minutes. Let me just take. I'm just going to take five here. I'll be right back, and then we will do. All right, here we go. No matter what you do, you cannot make water boil faster. I'm gonna switch this Nasdaq one over here just to Netflix. I think that's the most interesting potential long here. We're not buying a dying vine or anything like that. That's got the pre-market kind of stuff and things like that too. Yeah, let's look at. All right, so that's all setting up. Let me look here real quick and just kind of look at a couple of key quotes. Yeah, so BKNG, very nice. Like, let's actually take a look at that one real quick. Really nice recovery. I think it was down $300 after hours, and now it's So what we did on this is a one lot trade. We sold it for 155. It's currently 120. So we're kind of in that zone, right? And if we want to give it a little room here, we can. At this point, let's the more we wait, the more this is going to decay unless this goes up 100 points, right? So, oh man, okay, we're talking about this in Netflix here. So let's come back here now. Gosh, Netflix is almost positive. Let's take a look at some of these options. Yeah, and if we look at the so far the internals, no surprise, the VIX gapped up, ticks are down, you know, no surprises there. It's now kind of how do they settle into a group here? In terms of open interest and a potential kind of a pin on Netflix, do we know what the call wall is on Netflix? From the looks of this, it's hard. There's really not much open interest on the side. It is 11:50. Okay, I actually kind of like that. So cheap option, yeah, in case this thing kind of gets going. So if we look at like an 11:40, 11:50, it's probably $3. I think that's reasonable. Almost like the idea of just buying out of my call, but at least this way, you get a little bit of cushion. So if we did the 11:40, and I may just give it a minute here. Oh, that's not bad. So that would require quite a rally, but it wouldn't be much. My only thought process here is if I roll it down a smidge. Do we look at the 11:30, 11:50? Yeah, I like this better. It's more, the idea that we could get in the money on something like that. I think that makes a lot more sense. So let me see if I can get. I'm just going to place a little more at six. Let's see if we can get filled here. Spread wide. You can drive a truck through it. So you just got to sit on your order. All right, let me post this. Limit order. I'm not filled, and we'll just give it a minute because these spreads are pretty wide right now and all that kind of fun stuff. Somebody let me know if Booking.com takes off. Oh, it's kind of going back down here a little bit, quite volatile. All right, I'll let you know if I get dinged on a fill for that. All right, so that's Netflix. Netflix it's in its own world. S&P's here just heavy, 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 heavy. Okay, just got filled on Netflix. All right, now something like this is $20 wide. I'm gonna go ahead and set an exit for $12. if it happens to get going. And then total risk on the trade. Typically on something like this, kind of give it a day. If it starts dropping to like two, potentially there's a possibility we can add to it, stuff like that, just to see if we get the Netflix, Friday rally. But if the markets cave and Netflix starts caving, then it's like, okay, it's not going to work. We can cut it loose. Oh yeah, cancel. Right. Working GTC exit for Netflix trade. Right. So we'll work it at 12 points. 12 bucks. Okay. So if we look at the room here, bought it. We got filled at 6, and now I'm working the exit order at 12. All right. So that's that. Let me come back and look at booking again. Yeah, it's coming down a smidge here. Look at this. The premium hasn't changed. Yeah, let's. I kind of want to give it a minute. Let me look at it here. So for BKNG, yeah, it's a pretty muted response. I mean, it had a 290 point expected move. It hit the voodoo line, the fire line. So it got smacked to the upside when it hit that. And if we can hang out around here, that's great. And really just want to keep an eye on it to make sure it doesn't fall through here. But if it trades between 4,800 and 5,100, that's kind of a good thing. So we'll keep an eye on it. It's a crazy stock. I'm going to go ahead and work an exit order on it though. So we sold it for a credit of 155 points, right? This is a big, $200 glide, and I'm just going to start working an exit order at 95. See if that's something we can get, and that'll also be a good cancel order. All right, so now let's kind of get a sense of what else is going on here. So as we're looking at this so far, there's no let up. So this is, I mean, there's no way the market's going to recover as long as the VIX is making higher highs like this. So that's the first thing. Bond markets recovered. So the big difference between today and the big meltdown we saw, not too long ago, was that bonds were also collapsing with stocks. Okay, so the dynamic has changed, and that's just important. Um, it's just important to notice now. So that's interesting. And you've got, I mean, S&P's here, Nasdaq just walking down. And again, on something like this, just as if the market was up 114 points, um, I wouldn't be looking just to buy it. I'd be looking for a pullback. Just as if the market is down this much, But we're really just looking as kind of, something like this too, and it's always important to remember when there's a big move like that. The name of the game isn't about like, oh my god, we got to catch every move that ever happens. It's picking your spots, and typically, something from the stock indexes for the stock indexes is that we have these key times of day where you typically get turns, and for the S&Ps, it's typically between 9:20 and 9:40 in the morning Central Time. So we're selling off here. We're already coming down. We're already kind of walked through this kind of key level here, and volumes already dropping off a little bit, and looks like it's just going to be a little bit of hurry up and wait until the next economic numbers that come in here at 9 o'clock. And what gets interesting here on something like this is at some point there's a retracement. Now, is it a retracement that causes the market to go positive on the day? On a day like this, it's not going to happen unless um, there's a tweet or something like that. But can stabilize, it can provide just kind of some tradable opportunities, and that's where watching these key times of day, watching the internals, and all those fun things kind of come into play. All right, so we've got a working exit over on booking. We've got but the now trade is it's we got the May monthlies on it, fine there. Looking at exit order, and okay, we're starting to see the first little inklings. Is this thing going to possibly turn a smidge? Again, just pointing out here, bottom market is pretty strong. Now, what's interesting about this is in a normal, and I point this out because in a normal market, we have seen when the bond market's up, typically stock market's down. Now, maybe we are reverting back to that dynamic. But the worst down days that we saw in the market also saw down days in the bonds. So that was kind of a decoupling. So they might be recoupling here. We'll kind of watch and see how that plays out. The VIX is staying steady. We're not going to see any change here unless the VIX. I mean, typically, basically, the VIX needs to make new lows on the day here for the market to actually have some kind of a substantial midday rally. Otherwise, right now this is just kind of walk down mode. Slight rise. So the VIX is kind of at least pausing. It's not making new highs here. You can see the S&Ps right here just to see. All right, can they at least get something going here? And then if we want to see that, if we're going to actually see some kind of a turn, these are all kind of momentum oscillators from various time frames. At the very least, you got to see these short-term ones cross the zero line. As it's just kind of built toast. It's a roadkill, side of the road kind of a thing. So still heavy there. And again, we're not probably going to see much until 9 o'clock. Coming back to booking, yeah, great. The premium keeps dropping. Should have done 100 contracts. Let's see what else. All right, let me see. I want to take a quick look here at a heat map, just kind of see if all the sectors are moving together this morning or not. So no surprise, you've got tech leading the way down. You've got Nvidia, whack, Meta, whack, Amazon, whack, Tesla, a big whack. Keep an eye on that for a little bit later. Tesla kind of tends to rally on Fridays, so that's something we'll kind of keep an eye on. In terms of anything that's positive here, you've got Visa, Mastercard have been holding up. Um, Lily's been on a tear. We'll take a look at that. And not that I am adverse here to shorting anything. It's just that typically it's when if you see a big down day like this, you like to already be short. But the idea that we're kind of stuck here between about 100 point range, give or take on the SPX. At this point, we're just testing the bottom of the range. Um, I still think that I still think we actually have the ability. I'll talk about this more on my webinar on Thursday. I still think we have the ability to rally into a and so and again, remember the big gap down this morning is merely a pullback to the 21 EMA. All right, we're starting to see a little bit of a turn here. And not much. And then when we see something like that, kind of say like, all right, is this a period? Should we, are we starting to look at a time where we should kind of step in? The answer is no, not yet. But there's some good signs here. You've got, the tick is kind of moving up, but this moving average here, I mean, that's death. We gotta, you need to see that turn up. VIX is coming down, so that's the most important thing that's happening right now. And if we're going to see a substantial rally, like we get something really interesting, then we'd want to see this make new lows. So we're at a point where you could buy it, put a stop at the lows on the S&Ps, but we're also not really in the, we got an economic report coming out, I think in 11 minutes, and we're not really in the kind of ideal time frame for reversal, which is more 920 to 930. But we're just kind of hanging out there. All right, so slowly but surely. So let's look at a couple of key stocks here. Tesla. So it's down at its 20, coming down to its fire line at 21 EMA. So if that gets really whacked today, it's probably worth a buy at the close. MSTR has been pretty solid, and it looks like we're getting more of a bounce in that versus the rest of the market. So that could be an interesting one as well. It's been a little more, what's the term? It's been a little more kind of on its own kind of a thing. So kind of a big whack there, but that's also it just kind of hit started rallying. So yeah, interesting. So I think Netflix is interesting here. We've already got Netflix, and now it's really just kind of a matter of seeing how this market kind of plays out. Yeah, if we look over here, so the ticks, they kind of rolled back over. The VIX, not we're just not, so we're gonna have to get to. Let me see what's coming up here. So we got so a lot of stuff kind of gonna hit the tape here. I think in about 8 minutes. So a smidge of hurry up and wait. Yeah, and we have Starbucks from the earnings, and yeah, we'll give it a minute here to see if it can get some type of recovery. So it is trying to bounce, and since it is trying to bounce, We'll just kinda give it a minute. That's still hanging down 12. Look at see what's standing out here initially, and this early in the morning, it's kind of a, 5,500, okay, doesn't do too much. And then if we just kinda look at the option flows here, this will be interesting to see as we go into, just death, right? And let's look at equities, more death, and then Mag 7, even more death. So if we're gonna see anything, this is just kinda useful. It just shows that, option flow is bearish. And if we can see that this kinda turns up, that'll be very telling as well. So a little bit of hurry up and wait here. We got about 6 minutes before the next flurry of economic data hits. Right, let's see. All right, a little bit of hurry up and wait. Let's look at a couple of other things here and see what's standing out. So the Nasdaq is down 500 points, 2.5%. That's a big move to the downside. No six ways about it. At this point, we're still just down at the 21 EMA, which is normal. The market always reverts back to the mean. And we had that big test of the 21 there, another test of the 21 there that acted as resistance. We were able to get through it, and now will it act as support? Is this thing going to roll over the die, or is this going to be support? So the next batch of stuff that's going to hit the tape in 3 minutes, but I think it'll depend on really, again, just kind of going back. This is walk down action here. This is nothing. Nothing here is. This is the kind of stuff that we saw on the big down days, where if this just it doesn't change, you just fall all day long. It's like the lines on the chart don't really matter in this type of a situation, and it's so important to remember that lines on a chart are simply that. They're lines on a chart. If someone's dumping 100 million shares of Nvidia's price doesn't get to a Fibonacci zone and say, oh, you know what? There's a Fibonacci zone here. I guess we need to stop going down. It doesn't. It's irrelevant. They're just reference points of where from a probabilistic standpoint, sometimes stocks tend to pause and reverse. It doesn't mean it's going to happen all the time. It's going to depend on the force of the action behind it. Is this a 4 foot wave or is this a tidal wave? A fib isn't going to hold back a tidal wave. So that's kind of what the market discovery is happening right now. And if we look at, let's see, the Russell here, kind of the same thing, not a surprise. Coinbase, everything getting whacked. And let's see, Nvidia here, super important stock. Lackluster performance before Meta getting taken out back. This is pretty bad in Meta. So Meta really kind of came up to its 21 EMA, poked its head above it, and then kind of rolled back over and died. And so there's going to be a flurry of interesting things after the close today because we got a lot of big earnings. Microsoft, on the other hand, looks better. Um, you can see here that kind of like the indexes, it's just kind of coming down to its 21 EMA. So for Microsoft, I would call this more of a normal move. For Meta, it's a rejection. And then Apple, of course, which is a super important stock, holding up pretty good. Again, earnings, earnings, earnings. I mean, it's going to be insanity, um, insanity. All the earnings that'll be coming up today and tomorrow. What's interesting with all of this is that while Alibaba initially sold off on all kind of the tariff news and things like that, since then it's been like the Rock of Gibraltar. And then also just kind of taking a look at stocks that have weathered all of the selling and everything pretty well. McDonald's doesn't even know that there's a sell-off happening. So what's nice about this is you're trading. You can kind of define. You can kind of pick your adventure. And if you don't want to, if you don't want all the volatility of the Mag 7 right now, great. You don't have to trade it. You can step into something like this. All right, so we got news coming out now. You can see that initially here, the internals are changing, and this is the first kind of positive turn here. We're starting to cross above zero, see if we can get a little bit of legs happening. And then if we look at options flow and things like that, so it's trying. So at the very least, it's trying. And the question is going to be: is this suddenly going to change, absolutely impact and change the trend that hit the tape this morning, and we just kind of go back to in the short term, kind of buying the dip, or is this just going to be kind of temporary? Switch this here to. And then again on something like this, if I'm looking for a potential reversal to take hold, typically that's going to be between about 9:20 and 9:40 central. So there's a little, for lack of a better term, a dead cat bounce here. Saying that as someone who owns two Maine Coon cats, and so far not a lot of follow. Yeah, we've got Chloe and Bandit, our two main coon cats, brother and sister. They are, the term murder mittens. They embody that wholeheartedly. Yeah, and usually on days like this, I kind of find that when they're a good, there's typically at least one, if not two, kind of good intraday day trades to set up. And then the first one is we're starting to kind of approach it just to see are we going to get some type of a retracement. And again, really, if we're gonna see something like okay, so we're down 113, right? So what if the markets went crazy today and filled the gap? What would we have to see? The VIX absolutely blasting through new lows on the day. Like that has to happen. Ticks, of course, they're hanging out up here. The moving average goes positive, and then of course so you're starting to see like inklings, but this is nothing. Like this is just people stop selling for a minute, and so right now there's a little bit of a pause. Um, Not viable, and it's a little nerve wracking just to like to short right here. But at some point, if this is going to be a walk down day all day, then yeah, you just it's like all right, let's just grab some out of the money puts on SPH or something like that. But at this point, it's just all right. This has slowed down. You can see we're starting to turn here. Now, if this was a normal day and say S&Ps were down 22 points here, this is where I would start dibbling on the long side. But when you have something extreme like this, it's something a little bit uh, potentially bigger taking shape, then and you've got all the heavy ticks and all the kind of things here. So we're just gonna kind of give it a minute. There's no hurry. It's like all right, let's just kind of chillax here a little bit, kind of see what sets up, and then at the same time can also start looking at other potential opportunities, short and long. But the worst, it's not the worst, but the days where there's a big gap up or a big gap down, you're mostly either, at least initially, already positioned for it, or you kind of have to just sit it out for a little bit, and kind of wait for things to kind of square up. Yeah, cats are absolutely killing machines. Yeah, I do have a QQQ butterfly. We'll need to update that. Obviously, um, that was a bullish butterfly for the upside, so that's not benefiting from this action. That's interesting, Bruce. Yeah, it's well, that's a good sign. Just like it's taking a deep collective breath, and it really is just a matter of sometimes there's this feeling of like, oh my God, we gotta dive in and take advantage of it. But it really is just kind of like, okay, what's the one or two things that we're looking for today that would make sense in terms of setting up a trade in this environment. And the interesting thing initially is just looking at like, okay, is this a false? Is this a buying opportunity? And that's the first thing to look at. I think that's. I mean, frankly, if I'm thinking like, okay, what are the odds of that happening? I think it's pretty low, just because of the nature of how how heavy the tape is this morning. So the only way that that's going to change is if it's going to be like a Trump tweet or something like that. That if he can say something that relieves the fears of the current market participants based on the information that we saw today, yeah, then we can kind of get some short covering. But right now, there's no evidence of that. We're not seeing anything of it. So yeah, there's zero interest in buying. There's no buyers coming in here. All right, let me check the heat map again real quick. It's a little more red now. Visa and Mastercard were up earlier. Pfizer's. I just like who's bucking the trend today is always interesting. Not a lot. Not a lot. Oh yeah, something in the room mentioned Spotify. All right, starting. This is actually now. This is kind of again. This is what you want to see. We're not there yet, but that's at least showing good faith. The best rallies are always involve a short squeeze as well. Yeah, that's a pretty good recovery. I mean, that's a pretty fantastic recovery, actually. So gap down, moving straight up. That's not much of a better kind of a better vote of confidence that you can give a stock like that, especially on a day like this. Oh, I thought it was up $1.60. It's up $15. Wow, even more remarkable. Right, so we hit -1 ATR. We're crossing back up above the 21 EMA. Some good flow through here. Next week's options. Wow, those pretty big spreads. All right, so I'll just look at this a little bit of day trade. Yeah, man, super big spreads. Hard to get super excited about. This is something where it's like, okay, yeah, I can just buy the stock. So I like the momentum and everything on this, and pop here, it would make sense to sell the $600 puts. Just do it as a spread. That way, you're not. This isn't something where you're chasing this insane amount of premium. So I'll keep an eye on that. Let's see if it could kind of, it'd be great if it could ease back maybe to about 590, 585, 590, something like that. Yeah, it's funny because I've gotten used to trading, of course, SPX and some of these more liquid names. Sometimes when you see this, it's a little daunting, but it's okay. But you see these $600 calls, they've dropped $2 in 2 minutes just because it stopped going up. So the worst thing on something like this is that it's popped, it's had this rip, and then you buy the 610 calls. So that's when you want to sell them. But you also don't want to get in front of a freight train or anything like that either. So that's intriguing. But let's go back here to kind of the main task at hand, which is assessing if this market is going to actually turn. And yeah, I like Henry's comment too, just about the idea that if the SPX could get back above 5490, that would make a lot of sense too. Now, bigger picture, this trend line here, this is the longer term trend line on the daily chart from the downtrend. So that's kind of follow the downtrend. And so you can see we came down to that. We're kind of bouncing off. So that's a normal. I would consider that normal in this kind of a move scenario. I think it's maybe a little daunting because we haven't seen a lot of good things come from 100-point drops in the S&P, but we're starting to kind of come together, and we're starting to approach the time when a reversal shorter term momentum things turn positive, and the trailing ATR is positive. So, we're um, kind of getting through the resistance here. So let me see what might be interesting on something like this. Now it's tough because on a day like this could absolutely just turn out. But the good news is on something like this is that this is where you do something that's cheaper out of the money. Like, this isn't like, okay, I'm going to buy 5450 call PX, do a big bet. It's like, no, this is something where, is there a call debit spread that makes sense here on the SPX that we could hold for a little bit that ultimately is kind of cheap? And, the 5480, 5500s, the idea that we might be able to, what's the SPX trading at? 5467. So, what did I just do? So that does not look right. I just tried to do a $20 debit spread on the SPX, and the price was $24. So obviously, I did something wrong. So I'm just teeing it up. I don't, it's still a little early. So the 5480, 5500 is $7.25. And again, we're talking about the SPX, not so the S&P is going to be price different. So if we look at the SPX, that's what it looks like there. So a move back to 5500 would be basically a move to backward open, and that's not an unreasonable thing. However, there's a lot of resistance here. As Henry pointed out, 5490 is kind of a snow line. Maybe we're able to actually get back up to that, but get rejected. And we're still kind of that. We're in that time of day. I mean, at this point, this is still a dead cat bounce. Again, no offense to cat lovers. I have cats. I like my cats. But if you imagine dropping a cat from a high building into the ground, it might drop a little bit before coming back down to the ground. It could also be an armadillo. And so, as we're watching this unfold, we just want to get a sense of is we always want to kind of ask ourselves, if we're looking at something, and Bruce no mofo made a good point, going like, okay, it's open, and getting kind of anxious here, and because there is kind of a flurry of activity, and as I look at this stuff, I'll tend to like, okay, great, I've got some risk dialed in, let's do this, and this, and that can be a flurry of activity versus swing trading, which are kind of more thought out, there's not a hurry, and different things like that. So we want to look at this with kind of the same idea, and we also look at this from the perspective of the market, and not our perspective. But if we look at it from our perspective, we're screwed. From the market's perspective, it ripped ass to the downside. Now we're coming back up here. Now, from the market's perspective, is this like, oh my god, it's going to go and have this amazing day where it fills the gap, or is it like, okay, I'm going to try to suck in some longs here, and then we're going to rip the face off, right? Now, do we know which one it's going to be? Absolutely not. But what we can do to kind of get a sense of that is look at a few things. Namely, if you're familiar with spot gamma, options flow can help. The worst is selling is stop. But it's not, we're not blowing the roof doors off here or anything like that either. Let's look at Meta, key stock here. It's trying a little bit. Tesla. So nothing is doing any favors there. Let me come back to the trace numbers. 5,500 here is a big level. Now, it's kind of early in the day for that to matter, but that also could be a target. So 5,500, the idea here that we can test 5,500 isn't unreasonable, um, but that doesn't mean we will, right? So as I'm watching this now, it's like, all right, well, we saw some potential here. We're kind of, we're kind of giving it up here. And by the way, when you do, and I day traded S&Ps for so many years, so I'll look at this kind of stuff as kind of natural. But also keep in mind that doing all this is a lot of work. And a more relaxed way of trading is kind of let's you pull back into the snow line and let's buy it. And that's more of a swing kind of trade. And when it comes down to it, that if you can only pick one kind of trading to do, that's absolutely the right kind because it's less work and more money. This kind of stuff is more. I kind of like it because it's good practice. If you trade, you don't need to do it big. It helps you learn how to read the market internals. It's like and the way you learn to read is like, well, I think everything here is saying that we're going to turn, but then you buy something, and then that's how you kind of figure out if you're right or wrong. All right, well, it's actually trying here. I am going to give it a stab. What's kind of a reasonable debit spread here? Oh, no, I can't. Madre de Dios, qué chingao. Okay. I'm trying to get the 5480. Okay, I got the 5480, 5500 call debit spread for $7.35. So let me post. And expires today. Just kind of looking at it as a day trade. All right, so let's post this. Sure. So I'm just trying when I'm highlighting a trade alert here. Trade alert, looking for a move back to SPX 5500. So I'm buying the 5480 call, and I'm selling the 5500 against it for a net debit of $7.35. If we could get $12 to $14 for it, that would be awesome. Now, for that to happen, of course, we need to continue going higher. So, what are some things here that would change my mind? Well, if these ticks here suddenly, really, if we're going to have a decent rally from here, we cannot see the ticks go back to these levels. If we're at minus 1,000 ticks, then unless it's like a quickie, sometimes you get those little quickies. It would need to immediately bounce back up. But when you see this where the where the ticks are kind of low and the moving average keeps making lows, uh, that's just evidence of pretty heavy selling pressure. So now, as we kind of get into this 920, 940 zone, are these the legs that can actually pick up some steam? And we got to keep an eye on the VIX here. The VIX got to make new lows, all the fun things there too. You guys have been doing 15-minute bar strategy. That's and that's and from this perspective too, I believe from that you would be short here with the idea that ultimately you look for this to kind of roll over and die, which I absolutely that mechanics is so spot on. So I keep that in mind as well. It's point then on the bill. Oh, Wing. Yeah, I need. I trade Wing now just to pay for my medical bills for the diarrhea it gave me the last time I ever did. Sorry for the overshare. But I remember it vividly because I was like, wow, that's super not fun. So let's look at Wing here. I remember we were down on South Padre Island. We rent this boat to go see the fireworks down there on the bay every year. It's an amazing experience. I couldn't go. There was like 12 of us. I'm like, have fun. Glad I didn't go because if I would have, it'd have been very embarrassing. Interesting. All right, you go Wingstop. Now, from a Wingstop cleanse, yeah, man, my abs were ripped after that. Now, this is a pattern I don't really like. But when you see something like this, And if it's like earnings based, I mean, once you kind of we're right at the fire line out here, right? But if you break out of this, there's kind of some nice kind of walk up stuff here. So that's super interesting. I absolutely had my own fireworks. I mean, I didn't remember it. It's so bad. Like when it hits, you gotta like make sure you're sprinting to the bathroom. No bueno. All right, we're starting to get a turn. Let's bring this back over. All right, so we're in kind of that 920 zone. These have crossed. I like this bigger one. That's the 10-minute momentum. When that crosses, that's usually a really good sign. Keep in mind that that's VWAP. So at this point, all we're doing is rallying back to VWAP. That's tradable. This is the 8 EMA on the 15-minute chart. Keep in mind, this is just essentially a move back. So at this point, it's just a rally back to, there's nothing interesting, right? Just kind of a tradable move. We're at 54.75. Things are trying. Nice, nice. Julez, if that's how you pronounce your name. I was reviewing our credit card statements with our kids, and last month, between DoorDash and buying games on Apple, we spent $3,500, which is wrong on so many levels. So we had a little talking to. The worst though was when James was like 10 years old. I forgot the game he was playing. Some popular some popular game on the iPad. And I looked at and he kept going like, "Yeah, Dad, I'm ranked like 13th in the world." I'm like, I was surprised. I'm like, "Look, I know you're pretty good at that game, but in the world, he's like, yeah, it's amazing." I was like, okay. And then I get the Apple bill, and he spent like $15,000 on upgrades. And this is before, this way you can just push the button, right? There was no, are you sure? And that's when apps first came out. They just kind of tricked people, sucked them in. The kids don't know. So I did call Apple and had them have those charges removed, and we had a little chat about that. Yeah, this wasn't even. It wasn't even. God, what was the game? It was. It wasn't Fortnite, but it was some tower defense game where you could just keep adding defenses. It was all online community and stuff like that, and people wanted to partner with him because he had so much good stuff. And I remember him. The first red flag was they said something like, he was sitting next to me. He said, "This guy's just asking me if my grandma died and I inherited some money." I'm like, "Really? That's a weird question to ask." So, there's some clues that started dropping into place. I mean, this looks pretty good. We do have earnings. I mean, I'll tell you what. I think so. Last earnings, DoorDash ran into earnings. Earnings were pretty good. Last earnings, we rallied into earnings. Starting to see a trend here. Last earnings, we rallied into earnings. What I've seen too is that DoorDash has become so normalized. Before it was like, oh my god, but, if my daughter wants a boba tea, she can DoorDash with $30. So I think that DoorDash got more aggressive about adding their fees and stuff like that. So I mean, people want we have, even though it's insane. Yeah. So I mean, we're getting a nice move here. So I'm looking at a target of $12 to $14. I'll post the exit, and and I'm just kind of keeping an eye on is this going to be short lived? Okay, the last trade I do want to do. Thank you for bringing up DoorDash. I really like how it's acting. I like how it behaves in earnings, and we've got earnings next week. So if we go to next week, you're going to see that the implied volatility is going to be high. Not as high as I thought it would be. Well, actually, it might even go up to May. Now, the idea is not to ride through earnings. You could buy these higher IV. So, believe it or not, this high IV is when it's the week of earnings isn't bad because the IV keeps going up. So that means you don't lose premium. So if the market is flat, you're not going to lose money on your call. If the stock drops, you will. So it's kind of a unique time when it's actually okay to be long calls. And something like these, not a lot of volume. But I kind of like some out of the monies here for next week into earnings. So I'm just going to pick up some of these. The spread absolutely sucks. Again, just kind of a run into earnings trade. Can I get this at $5.15? And the answer is yes. Okay, so I'll post that, and then I'll hop off the mic here, and then I'll update all these trades in text, including any targets and action plans and stuff like that too. Um, Trade alert, and I'll recap what we have. Run into earnings on Dash. All right, everybody, thanks for joining, and I'll be hanging out today and see if there's any other trades. A quick recap on S&Ps here. We're getting kind of the nice grind. Doesn't mean that we're out of the woods, but look, this is great. Look, the VIX has made new lows on the day. Ticks are moving higher. If there's a positive tweet here, this thing could rip ass. So just be careful on the short side. And then we'll see. It could easily die on a vine, but as long as the VIX is trending lower like this, you know we're gonna smoke some shorts here. All right, guys, have a good one, and then it should be a dull day.